All right, so today we'll be starting off with the basic foundations of price action, which is so fully my type of way of trading price action. Like it's very, very important to know. Like that's why I sent you guys out those books. For those that were not on the first call, that's why I sent you guys those books, the naked forex and everything, for you guys to study it because it's like my style of trading is really based off candlesticks and support and resistance and demand and supply zones. And reading those books will help give you a great knowledge of how to use those things to your favor. So price action is like, let's see. So price action is a method of it's a method of analyzing basic price movement to generate trade entries and exit signals that is considered reliable while not requiring the use of indicators. Like so price action, you don't even need indicators. Like I said, I don't trade indicators no more. In the beginning of my trading career, I had a couple of indicators that I was using, but along the years when I kept on trading and I found it like it wasn't useless, but I found myself being able to trade better without those indicators. Like the indicators was kind of slow, giving me slow entries, giving me slow exits. But if when you trade raw price action, you get the best of entries, you get the best of exits, just because you're literally seeing the raw price movement rather than waiting for an indicator that has like a 2 hour delay. 2 hours is a very, very like very long time when it comes to trading. Very long time. You can lose all the money in your account in just 2 hours. You can lose all the money you already made in just 2 hours. So that's price action, doesn't require no indicators. So I'll give you guys some indicators to assist you as beginner traders so you guys could be able to use it for certain reasons. But along the way, trust me, the more we go into depth into trading, the more you become good at it, you realize yourself that you don't even need none of those indicators no more. So price action definitely is like also looking at historic data in price because no strategy is there that you can't look at historic data. You always need historic data to predict the future data. You need to be able to look left to predict right. So you will still need to be able to look left to predict right. So today we will start off. People's connection always kicking it back in and out, in and out. Today we'll go ahead and start off with the first thing, which is, where's this text stuff? We're going to learn about, I'll give you guys one of the indicators that I use. Let me just start it off with that indicators. I could actually give you guys two indicators to assist you guys with beginning of learning how to trade. So the first indicator that I use personally, I use or used to use. There's nothing wrong with those indicators. They will assist you when so your brain develops when it comes to trading. But as of now, I'll just give you guys, we have the moving average. So there's two types of moving average. You have the simple moving average and the exponential moving average. Moving average. Let me see from my notes on here. I have it, but I have it on my screen, so I can still look at it on my screen. But let me just check on this book if this is a book with the moving average notes. All right, yep, I have it here. So we have the moving average and we have the exponential moving average. I'll just write EX moving average. So when it comes to the moving average, the figure for the moving average that we'll put is 21. I will show you guys what I'm talking about, let me see. Goldberg, I'm gonna put you my co-host to help me assist people and meet people into the call so I don't get distracted. Victor as well. Victor is still on the call. I'm gonna do that. You should get, let's see, Victor, the co-host. Yeah, you go ahead and assist me while I'm meeting people into the call. So for exponential moving average, what the fuck is this shit? Exponential moving average is gonna be the level of 8. So that is moving average. This is the indicator right here. This and this. On my regular chart, you can see that moving average. You can look at it. You can take a screenshot of these settings. The length of the moving average is supposed to be 21. That's what I said right here. Moving average is 21. My style, I made it a black line. So the moving average is more of like the bearish moving average. It signifies bearish movement in the market. While the exponential moving average, which is 8, which I just told you guys, is my gold moving average. That signifies bullish momentum in the market. So now you might be getting confused, like what is bullish, what is bearish. Bullish market is like when the market is going up, and bearish market is when the market is going down. So the length is 8. The style, you could choose whatever color to, some people could choose blue, but me, since my chart is black and gold, I already just choose that, okay, let my lines to be, the moving averages should just be like, black and gold as well to signify the candles. It's an easier way of understanding. So in this case, let's go on the chart and take a look at this moving average. The moving average, when you see the black is above the yellow line, it means it's in the seller's market. Like right here, we can see an example. When they cross, that means the market changed structure, it changed directions. So because you can see at this example right here, the market crossed as well. It crossed over here, and the yellow was above the black, and you can see that the market is in an uptrend, which is in what I said is a bullish market, so it's going up. And you can see right here when it starts going down, the market, this one goes above the yellow line and it starts selling. And again, when it's about to go up, it crosses again, it goes up. If it's about to go down, it crosses again and it goes down. So when the black, which is basically the 20, the 21 moving average is above, means it's a bearish market. When the 8 is above instead, it is a bullish market. Does that make sense to you guys? Do you guys see do you see the examples on my screen? You see it crossed here. The black is above the yellow. It's going down. It's a bearish market, right? It crosses again here. It goes to a bullish, just like that. If that made sense, you guys drop it 1. If it did not, drop it 2. Then you ask your question why it did not make sense, so I can explain it. Can't believe I'm out of water. Yeah. All right, Malware said it makes sense. Cultures said it makes sense. All right, Victor said it makes sense. All right, cool. So a lot of people said it makes sense. So that is all about moving averages. Moving averages is nothing too difficult about them. Just you need to understand that moving averages, take this down. They are best used in the trending market. Do not use them in the consolidation market. So before I even go again further, let me explain you guys the different types of ways the market moves, because I don't want to be using things and you guys are not understanding. So I wanted to explain this during structure, but I feel like I can't move further during price action if I don't explain this right now for you guys. So in the Forex market, the market moves in 3 ways. The market is either moving up or moving down, or it's moving sideways. When the market is moving up, it is called an uptrend, or you could call it a bullish market. When the market is moving down, you call it a downtrend, or you can call it a bearish market. When the market is moving sideways, you can call it a consolidation market. It's consolidating. So I'm not going to go ahead and explain too deep into everything right now because I want to save that for the lesson for structure, which will be probably another day, not today. So that is that. Like, so you guys take note of these when I'm using the terms bullish market, bearish market, or uptrend or downtrend or consolidation market, or it's moving sideways. You can see the examples and you understand. So these that I just explained to you guys make sense. If it did, you drop me 1 in the chat. If it did not, you drop it 2 in the chat, please. Nana said it didn't make sense. Okay, so the forex market moves in 3 ways. The market is either moving up, and when it's moving up, what do you call it? You call it an uptrend, or you call it a bullish market. The thing in forex is you will find a lot of synonyms that different names, but that they all have the same meaning. So you can say, oh, AU is in an uptrend, AU is in a bullish run, AU is making a rally, AU is expanding. Like those are all of those words that I just said mean the same thing. But I don't want to go into depth into all of those different words because I'll use them with time as we get to different topics. But in this case today, I'm just telling you guys 2 words. When it's going, the market is moving upwards. It's either you can say it's in an uptrend or it's in the bullish run. And when it's moving down, you can call it a downtrend, or you can say it's in a bearish run. And when it's moving sideways, you can say it's in a consolidation market. Practical example right now on the charts is this. This market right here was on a bullish run. Right here, market was in a bearish run. In this position right here, market was consolidating because it was moving sideways. Did that make sense now to you, Nana? Is Nana still there? Yep. I don't know if it's a he or a her, but I think the person probably got it. So I'm gonna move forward, not to hold everybody else back. All right, Nana says she got it. Too quick one. I hear a she or a he, so it sounds like a she type of name. Another indicator that I used to use in the past, and this indicator is a trend-based indicator. Nana is a he. Okay, my bad. My apologies. I'm thinking if I should give you guys this indicator or not. But it was a decent indicator though. I'm gonna just give it to y'all. It will help you know, like, be patient while taking trades to wait for trades to get to certain places. Though, like I said, everything will lag, but let me just give it to y'all. So it's called, well, let's say give it, it's called an ADX indicator, average directional index. That's basically what ADX mean. Let me see if I can. And when you want to look for those indicators, right, this is where you come. You click on this indicator tab right here on the top, and then you tap on them. You come to the search bar and you type moving average. This is the moving average right here. You type moving average. I already have them start moving average and moving average exponential. This is what you need, these 2 indicators. So let me look for that ADX indicator and see if I can find it. Average directional index. So we tap on that. All right. So ADX, I think it was something. Is that the correct one? It's supposed to have like 2 lines to it. It's, I don't think it's ADX by Cobra. It's by something else. I'll probably have to look for it for you guys. I don't want to give you the wrong thing. National index, because there are multiple things that I have to give on it, and this is showing not to be it. Yeah, this is not it. This is not the ADX I want. So maybe I'll just keep this one for now, but I'll give you guys on the next class because I wasn't really planning on giving it to you, but I'll just give it. It's whatever, no problem. We're still here together, so it's not big. Because these things, when it comes to indicators, you need certain providers for those indicators. Like you can say, oh, you want to get an ADX, you can see like how many different ADX are showing up. And all of these ADX are having different providers. So you have to really, yeah, I remember Jonathan, like, I don't know, like, I remember like back then, I had given that out. So I don't know if you like got it from me or from somebody else, but I don't know if you're on the call, like the mentorship last time. Yeah, ADX is cool, but I learned to trade without it. So I was like, okay, I don't really need it. No, you haven't missed a lot. Not yet. So we will go out, about that on the next class because I'll probably have to go check out some things. All right, so that's that about the moving average. That's just that about moving average. That's like that, and I needed to give you guys another indicator, which I'll give another time. So the next thing we will study is this is my notes. Chart patterns. Patterns that you see always in the market that will chart patterns. So like I was saying earlier, right, where I was explaining about a whole bullish market and bearish market, consolidation market. When it comes to chart patterns, right, chart patterns, they vary by the type of market that you're in. There are bearish chart patterns, there are bullish chart patterns, all of the like. So give me 1 second, let me pull out that notes. Or is this not like, we'll start off with the bearish chart patterns. So one of the simplest bearish chart patterns that you always find is what is called the double top. And in this double top, there are like literally different types. Tranquility. You guys give me a second, let me pull out my notes. So I'm working on everything. I'm not leaving nothing out. I gotta love the internet. Go fast sometimes and it goes hella slow. But anyways, there's the double top. And in this double top chart pattern, you find it at the top of a trend. So if the market is moving on an uptrend, like I said earlier, which is an uptrend, you find these patterns most likely at the top of a trend. And let me just say this is, to correct myself properly, this is a bearish reversal pattern. So we'll start off with bearish reversal patterns. My system taking so long to load. Bearish reversal pattern. So when the market is moving in an uptrend, you find it that, okay, you will see a double top. In some cases, not always. Remember, Forex is all about probabilities. Forex is all about if you see this, then we'll do this. If you see that, then we'll do that. It's not like always we're going to see this at the top of a trend or we like, so in this case, if you see a double top at the on an uptrend, that means the market is about to reverse on us. There's a high probability that the market will reverse on us. So the market will do a double top, and in a double top, now we'll go a little bit in depth. There are different types of way the double top will react. We have the breakout method, and we have the break and retest method. You may ask, what is the breakout method and what is the break and retest method? Does anybody have an idea what that is? What those two things are? Or any of them? You say you do? Yeah, Lulu. You want me to unmute you to say it, or do you want me to, are you all right with typing it in? This is for Terry and Helmet, iPhone 3. Do you guys want me to unmute you, or do you want to type it? All right, let me try to unmute Terry and hear what he has to say about it. There's Terry. I'll ask you, Terry, to unmute.
Hi, bro.
Hey, what's up, bro?
Hi, man. What I think about the breakout side, like when the price is consolidating, right? When the price is trying to correct itself, sorry. Let's say a price was moving down, like a downtrend, and it comes to a position where it's like trending sideways, right? And let's say a breakout might be either the price is leaving from the consolidation position going to a bullish, like a straight bullish point or a bearish point. Like maybe that's what I think a price breakout is from some videos I've watched. So I don't really know much about it. That's just a little I know about it.
All right, so I hear you explaining it, pretty good. But in this standpoint, let's talk about the breakout method in respective to the double top pattern or to the M pattern.
Okay.
Let's speak it in respect to that, because like now you've given an idea of it, but based off a consolidation market, but not off a double top pattern.
Oh, okay.
Yeah, that was still pretty good though.
Okay, bro.
All right, good. Let me just go ahead and explain it. Thank you, Terry, for being able to speak. Okay, so yeah, in this case of a breakout side of things, so normally the basic ideology when it comes to a double top pattern that everybody knows, the whole trading world knows, is like, okay, the market gives you a double top, it breaks out on the neckline, and then it comes back and retests that neckline, then it continues selling. So in this case, what they call the neckline is right here. This is a neckline. If you Google double top, this is the major ideology you see about a double top, that it breaks out, retest. So this is the break and retest standpoint of things. The breakout part of things is price just literally, when it creates the second leg of the M, the second leg of the double top, it doesn't come back. It doesn't come back to retest. It just literally push down and it doesn't come back. But if it does come back, it's gonna be like after a couple of candlesticks, which will like stick down, would have taken longer. It probably sold a little bit too much before coming back to retest. But usually people expect that, oh, when it just breaks out like that, it just comes back and retests and then they'll sell. But now this is where you have to study your candlestick patterns, because when you know your candlestick patterns, you'll be able to determine if that was a breakout move for you to enter a trade and not wait for the retest, or that is the type of trade where you have to wait for the retest. Like in this scenario right here, we can see that this is a double top pattern. We just have one already by the side, like we can clearly see. Price was what? Moving in an uptrend. Moving in an uptrend, came and it found a certain level of resistance. Even we have not yet gone to support and resistance, but it found a level of resistance, right? And then it gave us a double top pattern. You guys see it, what I was just drawing there. And then it broke past the neckline, which is this down part. It broke past the neckline and it kept on going down. You see how much it sold before coming back for the retest. The sell price came back for the retest, then it continues selling. So when you become a very good trader, you can go ahead and trade this breakout and still be able to catch this retest and still trade it. So this was the breakout. A breakout was like a strong impulsive candle that pushed downwards. It's not like a little simple candle that pushed. It was like a very impulsive candle. Let me look for another example on the chart for y'all. Like right here. Like right here, this is a double top as well. This is where trading becomes a little bit difficult, where it's not as crystal clear as you literally. Yeah, breakout means it goes past resistance. The breakout retest as well, it still goes past resistance. The breakout is the size of the candlestick that breaks out of resistance. I mean of support actually, because it's a double top, so it's support. It breaks the support, not the resistance. For Jisung James. So you see how the double top looks. Sometimes people be like, oh, it's not clean, but for me, this is a very clean double top. Price does a very nice double top. You can see this was a retest right here, though it beat the upside. And this type of week will literally like clear out people's stop losses and take money. It's like a stop hunt type of candlestick right here. But I think it was mainly like news. That's what news did. So it swept liquidity above here. You guys don't know those terms yet, but you get to know it. And then it started selling. But let's just focus on what we're looking at right now. Let me not go in depth into things that you will not really comprehend at the moment. Like you guys hear me saying at the moment, because I know in the future you guys will get to comprehend a lot of things. But as of now, we just keep it as simple as possible. So that's a double top, right? You can see price broke and it came back, it retested, and then it dropped. Easy trade. That's the neckline right there. So we can see that price was just giving a kind of weak breakout. This type of scenarios is always good to wait for the retest, because when they like it was selling, it was barely selling with any momentum. Like the candlesticks were too small to signify that okay, it has a high bearish momentum in the market yet. So this is like a nice scenario to wait for the retest. This is a break and retest scenario. The first one we looked at was a breakout scenario. So that is how chart patterns are. Most chart patterns, you will see them, they have two scenarios. Either they break and retest or they do a breakout. The breakout is being determined by the size of the candlestick body that breaks out of the resistance or the support. But in this case, since we're talking about a double top, we're talking about a support. So before I move further, let me go ahead and explain what support and resistance is, though I will not show you guys how to draw those right now. I'm like keeping that for another time, probably like. So support and resistance, right, is like I would call potential price reversal areas in the market. I like using the word potential. I like using the word probability because nothing is certain. Things are only certain to the end. Things are only certain to the end, because you might see A and B, it give you C today, tomorrow you see A and B and it gives you D. Just because maybe there was one factor that you didn't put in mind and it didn't give you what it was supposed to give. So in this scenario, let me just explain now. Support, resistance actually is like a roof. Think of a roof. You're moving upstairs and there's the roof and you hit the roof. You can't go past that roof. You can there's two things you can do. You can either break that roof or you bounce back. That means you turn back and go down. So that is resistance. Support is like a floor. Suppose like a floor where price gets there, it could either bounce off it or it could break it. So yeah, pay attention. Resistance could turn to support and support could turn to resistance. The only time where resistance will turn to support is when the price breaks that support, that resistance level. That's when resistance turns to support. It's like living in a 2-floor house. If you're moving up, if you're on the first floor, what is above you is called the roof at that moment. The moment you move to the second floor, the roof becomes the floor you're standing on. You feel me? So the same thing with price. The same thing with price. If price is moving, and this is resistance right here, this is resistance right here, R. Price is moving upwards, and then it finds resistance, which is the roof. Price respects resistance and sells again. All right, that's cool. It respected resistance and it sold. At that point, resistance is still maintained as resistance. The moment price breaks out of resistance, that resistance automatically becomes support. So price could literally break out of resistance and retest that same resistance, which is the newfound support, and it bounces and starts going up. Sometimes I'm saying sometimes because it's not all the time price will come back again and give you a perfect retest. Price might it might like pull back around this area and not come all the way down. But that is when you start using what we call the FEEEE, and it's a useful tool for like things like that. But in this case, let's say it gives you a break and retest, a simple textbook something, and like that's it. Vice versa when it goes to support. If price is moving from a downtrend and it approaches the support, which is the floor, you can only bounce off the floor or you can break through the floor. So it could bounce off, but when it comes and it breaks that floor now becomes the new roof. It becomes new resistance. So it's the break and retest, and support turns to resistance. Did all of that make sense? All right, that's good. Some people are getting it. I want to make sure like so some people on this course, so I want to make sure like we're all getting it. I don't want me moving forward and leaving some people back. Like I said, all of these things are important that we get it, because there's no way I'm going back to things. As I'm moving forward, I'm moving forward. All right, beautiful guys, beautiful. I'm happy you guys are following up. Okay, so since you guys have the whole ideology of what support is and what resistance is, so now better yet explaining a double top pattern is price moving on an uptrend, and then it finds a level of resistance. A double top is formed at the level of resistance, and price breaks the neckline, which is also known as a support at that moment, because at that point, price approach a resistance right here. And there is a support right here. So price turns that support to newfound resistance, break, and it could retest, and now change market direction to a downtrend. It could break and retest, or it could do a breakout. So that is our first bearish reversal pattern. Our second bearish reversal pattern that you see on the charts is what we call a head and shoulders. Excuse me. Same thing I said for the other pattern. You either find the break and retest, or you just find the breakout. So head and shoulders, we see price going on an uptrend. Price approaches a level of resistance as well. And when it approaches that level of resistance, it creates that. So this scenario here is called the perfect head and shoulder. It's called the perfect head and shoulder. Because why did I say the perfect head and shoulders? Because you can see all this level in price here are literally being maintained on the level of support perfectly. They're all at equal level. But this is the perfect head and shoulder, but this is not the perfect head and shoulder to trade. Let me explain why. Let me explain why to you guys. So in the case where you have an imperfect head and shoulder, same price moving from an uptrend and it approaches a level of resistance, all right, it gives you a head and shoulder like this. It gives you that and gives you that. This is a perfect imperfect head and shoulders because price has already shown you that it's already switching structure. It's already switching from an uptrend to a downtrend because this low is lower, is already broke below, and then it gives you again a lower high, and it's definitely for sure that you will get, not like definitely for sure, but it increases your probability that you will have price going downwards. So all of these, you can see that this one is a scenario of an imperfect, and this is a scenario of a perfect looking head and shoulders. This is a scenario of an imperfect looking head and shoulders, but this is the perfect scenario that you would like to trade. And this is a scenario where you actually want to be, you really want to wait and get that retest, or if you're able to catch that breakout, that is good because breakouts are really fast. Like breakouts is not just for any type of trader. But so right now you guys want to train yourself to catch those break and retests instead of like catching breakouts, because breakouts are really more of like a type of sentimental stuff, and also being able to trade properly on the lower time frames. Like we are able to navigate on the 1 minute and 5 minutes. That's how you can catch those breakouts. But if you don't know how to, but as of now, you can just stick to like the higher time frames and wait on the break and retest. So like I said, on another one, we have the breakouts or the break and retest, and we have the perfect head and shoulders and the imperfect head and shoulder. So let's see if we go on the chart, we can see an example, a practical example of head and shoulders on the charts. Let's see if we look for one. Sometimes you might just need to go out on a different time frame. You might see it. Let's see. This was a head and shoulders with a breakout candlestick, and when it came back, it didn't retest. So that's why like everything is about probability. Sometimes it's gonna come, and that's how along the way I'll teach you guys how to not to like get caught up in like fake reversal patterns where you see the reversal patterns, you'd be like, oh, this thing was supposed to sell when it came to the neckline. It's like I said, it's all about probability. It's not about loss. It's probabilities, and you need to know certain factors together that will help you. So I'm gonna teach you guys like, oh, you'll be able to identify when price gets to a certain level. If it doesn't give you this thing, then you don't sell it. Just like in this case. This case, it came, it gave you a nice head and shoulders. Can all of y'all see this head and shoulder? It gave the head and shoulder here, kind of like the perfect head and shoulder actually. You see what I tell, the perfect ones be kind of like tricky. Then it came here and it gave the breakout candlestick. Why did I call it a breakout candlestick? You see how impulsive that candlestick was that broke out of the neckline? This impulsive candlestick. And then when price came back, you think that, oh, I'm waiting for the retest, right? I'm waiting for the retest. And price never gave you that retest. Instead, pushed back up and started going on an uptrend. But as well, yeah, it's also a head and shoulder, but it's just like a nasty head and shoulder because this one's like two candlesticks that you can see it as well. So this was like the retest, so came again to the same level. retested it again the second time and kept on selling. Do you all see that? If you see that, you drop a 1. If you don't, you can like ask your question. Because I think that's pretty clear. All right, cool. All right, so we have our head and shoulders. I've shown you guys like this was a winning example, this was a failed example. Like all of those things are probabilities. You will see them, you will not. Like in this case, look at this double top right here. Double top, breakout candle, it just went. Then it finally came back to retest it like later on, and then it started selling. Right here again, this example of a head and shoulders. This one is a tiny head and shoulders right here. Push down that. So this is an imperfect head and shoulders. You can see how the neckline is not straight, it's slanting. Like that's the neckline. Like you see that one? That's an imperfect head and shoulders. Let me zoom into it. You see that imperfect head and shoulders right there. And then it retested, and then it kept on selling. Like these patterns, you'll find them a lot around the charts. You just have to train your brain to like, to see it. That is all. You got to train your brain to see it. If you don't train your brain, you're exercising it every day like a muscle, like any muscle. Like people that, the people that go to the gym, you work out, you train your muscle every day or majority of the days in the week. The same thing with your brain. You got to train your brain. Your brain is a muscle as well. You have to come here, try to look at the things over and over. Why is this thing not opening? The hell? I'm really trying to open this thing. It's not. Anyways, that's like what are the okay. The other reversal pattern that you can find on the chart for a bearish pattern will be what we call the triple top. So the triple top, price, the same scenario, price is on the uptrend, and then it finds its level of resistance, and it tests that resistance 3 times. Then it finally breaks out, retest, and then drop. All these patterns I'm showing to you guys, there is no specific time frame that you will find these patterns on. These patterns are on every single time frame. These patterns you'll find it from the 1 minute, 2 minute, 3, 4, 5, 6 till the monthly charts. You will find it throughout every time frame. It's just how long it will take to form. Like if it's on the monthly time frame, then it took a couple of months for that pattern to form. If it's on the hourly time frame, it took a couple of hours. If it's on the minute time frame, it took a couple of minutes, just like that, That's why it's like one candlestick signify 1 minute when you're on the 1 minute time frame. So if you see it, then it took probably 30 minutes, 31 minute candlesticks to form it, just like that. So this scenario, triple top, price from uptrend to resistance, break and retest. You guys can be drawing this down though. Like you need to draw it down. Like when I started learning, I was drawing these things down. This is not even my old book, but the first trading book I had, I was drawing reversal patterns like that. Like all of this, you guys should be taking the notes down. No takers and money makers. Your brain is not a computer. You need to have that in your mind. All right, bet. So this is a triple top. It comes 1, 2, 3 times. That's why, like, when it comes to the double top, it's cool to like play safe. Like imagine if the double top scenario, it's always good to play safe and wait for the break and retest, because let's say if you get in thinking that's gonna break out and you have like a cheap stop loss like somewhere around here, you find yourself that, oh, maybe price is coming to give you a triple top before giving you your move. So you'll be right about the direction of the market, but you'll be wrong about the trade, because it wasn't selling at that moment, but it finally sold though. Which if you are waited for the break and retest, you would have caught a good trade. Or if you would have had a proper stop loss above all these highs, you would have had a good trade as well. So those are just like reasons why people be failing as traders. They be having wrong stop losses. They not be waiting for the final confirmations. It just be varying like now and then. So the same thing for the triple top. You can have a break and retest scenario, or you can have just the breakout scenario. So that's just it. So let me go ahead and share my screen for these. So in this scenario, this is the triple top, 1, 2, 3. This is the breakout. This is the break and retest actually. This movement right here, this is a retest on like a 30 minutes time frame, though it didn't show perfectly on this time frame, but this is a retest right here. So this is a triple top scenario, and then you see how the market goes down and sells. Then this is like this is a double double top again. I don't want to show. That's like a whole trading stuff. Yeah, head and shoulders, imperfect head and shoulder. You see how it goes. And this one was a breakout scenario. This was not a break and retest. See, it breaks out, they didn't give you no retest, and it just kept on going. So that's like an example. Let me go back to sharing my screen. Just wanted to show you guys that one particular example. Because I wasn't trying to be searching for the whole things. So that is bearish patterns right there. And anything that's on the bearish side of the market, we definitely see it on the bullish side of the market, because the market is the balance factor. It doesn't let one side take over. It's not like, oh, the market favors the bears more than the bulls. No, both of them are equal. Just at some point in time, one will always dominate one than the other. Two of them will be equal, but they will have the same patterns, which could be for the candlesticks or for the what we call this, or for the chart patterns that I'm currently teaching right now. So I'm just gonna like flip my screen, because like I said, the same things for the bears is the same thing for the bulls. So we'll start off with like the double bottom that we had studied at first. For the bull market, you'll see that we have this called as a double bottom, or you could call it the W. Price is moving from a downtrend, and it comes. This is called, now we're studying bullish reversal patterns, bullish for the buys, things you need to see before you buy. What we were studying earlier was things you needed to see before you sell. A couple of it, not just, or just like part of it though. So this now we currently studying is what we need to see before we buy. I lost my chart. All right, so price is moving on a downtrend, and then it approaches now this level, approaching a level of support. This is support now. This is support, and this is resistance. Price approaches that support, it reacts double bottom, tested it 2 times, 1, 2, signifying potential reversal. And then what does it do? It does a break, and then it does a retest, and it pushes to the upside. So the same scenario, it could do a break and retest, or it could do just a breakout, right? It's the same ideology. So now this one is not called a head and shoulder. Excuse me. It is called an inverted head and shoulders. Inverted head and shoulders, price comes, it gives you the left shoulder, gives you the right shoulder, and then breaks and retests, and then the probability for it to go up. And this one's imperfect. Well, when it comes to the triple bottom, there's also triple bottom as well. It approaches a level of resistance, same ideology, support. My bad, guys. It approaches a level of support, tests it 3 times, breaks the retest, breaks the resistance, then it could retest, or it could do a breakout, and then it keeps on going. So I don't really need to waste too much time explaining this, because I already explained the first one pretty much in details. So this is like, so now the question you might ask is, after this move happened, how far would the move last? That's like a question I think some people have in their mind, or maybe had but didn't know they had it in their mind. So that is, you can only know how far the move goes is just by identifying the next potential reversal areas and just seeing how price reacts every time it approaches it. Like this, I can't tell you that when price breaks head and shoulders, it will sell 50 pips, it will sell 100 pips, it will do that, it will buy this. Now I can't say that. Sometimes it will break and it gives only like 10 pips, and the next moment the market just reverse again. So but along the way, when we start teaching you guys about exits and entries, that is something I'll advise nobody should miss, because that's a big struggle for every freaking forex trader. So I don't think you want to miss that. So that is the bullish pattern. This is called a triple bottom. The other first one for the bullish, for the bearish was triple top. That was the inverted head and shoulders we studied. So any questions so far about these reversal patterns? These are reversal patterns. These are the reversal patterns that I personally pay attention for, because the others are like, it's a lot, but these are just like the major ones that you will see on a day-to-day basis and that will actually do matter. If you understood everything so far, drop a 1 in the chart. All right, that's good, guys. That's good. We're following up. I love that. Where the hell is my thing at? All right, so now the next thing we will study is continuation patterns. I'm trying to look for my notes in my phone because one of my computer is not pulling up. I trade on MT4 and MT5. It just depends which broker I use. I have both MT4 and MT5, but I personally like using MT5. I feel like MT4 lately is like kind of like slow, like it be lagging, like with the connection to the servers. It takes some time to connect to the servers. One second, let me try to pull different notes. All right, John, what part of things did you not understand so far that I've been explaining? What is this thing? It's please unlock me. All right. Where's your name at?
Thank you very much. So far, I understood everything, but what I was a bit confused was what I was a bit confused was the different directions, like the bearish and the bullish markets. But I came to understood it. So my question is, does this same pattern applies also in crypto, or is it only on Forex?
It applies on crypto as well.
Okay, thank you very much.
You're welcome. Like, if you know how to trade Forex, you can literally trade anything else.
Okay, thank you very much.
You're welcome, bro.
Thank you.
All right. These things are just trying to humiliate me today. Like, what's happening? All right, so that is not trying to do what I wanted to do. So just give me 1 second, guys, please. All right, so I'm gonna just use my all right, I'm gonna just do this. So that now we're going to bullish continuation patterns. Let's do bearish. Since we started bearish with the first one, let's continue as well. Bearish. So bearish continuation patterns, things that you see in the market to know that the market will continue in that direction and it will not reverse. The first thing we learned was the reversals. Now we're learning continuations. As the same thing as the first one, it all applies in all time frames. And this is what we're studying right now is bullish continuation patterns. So in the case where you have the market moving in an uptrend like this, and then you can literally find the market moving like kind of side. This thing stopped. You can find the market moving kind of like sideways, right? But it's not really sideways, but it's like you're seeing it maintaining the lows, but the highs are being reduced. And then you find yourself with price giving like a breakout. You could give a break and retest, or it could give just a breakout. So, but in this scenario, let me, I want to turn this like that. All right. Yep. So that's that. And this is called an ascending triangle. This is called an ascending triangle. I'm doing bearish continuation patterns. Damn, I spelled that so bad, even autocorrect will not correct it. Yeah, so this is called an ascending triangle. I will show you guys a live example of it later, but now let's just move forward. We have an ascending triangle. And the next thing we'll have is called a bullish flag. The same thing, price is already moving in an uptrend, creating highs and lows. Then I can see your screen, yeah, it's stuff. Can anybody else not see my screen? You might be on the wrong screen. You might want to, I don't know, swipe something on your phone or your computer. Probably, yeah, you need to probably swipe something like that. Dream Chaser, you said you can or you can't, or you said me too, you can. So this, it does that, you know, it bounces like that, and you're waiting for the breakout, break and retest, and it keeps going. Okay, you can, cool. And it keeps going to the upside. It's not only to pull that stuff, so whatever. So this is an ascending bullish flag. This is a bullish flag, sorry. This is called a bullish flag. Like it's kind of like a flag. So in this case, this acts like a resistance and this acts like a support. And also this also acts like a resistance and this acts like a support. So price is like within this level, and when it has the breakout, it could have like just a strong breakout, or it could have the break and retest. So this is called a bullish flag. A continuation pattern that I as well I pay attention to in the market. This is a bullish flag. So there's another one that is kind of like similar with the ascending triangle. This is just like, it's like in between, kind of like a bullish flag and being an ascending triangle at the same time. So it's price is going up like this. And then let me draw this first before I start like trying to do it. So it's kind of like descending and slowly contracting, but it doesn't really like close all the way. So it does that. And you got the breakout retest, or you got the breakout. So this is called a pennant, a bullish pennant. So that's a bullish pennant right here. Bullish pennant, ascending triangle, and bullish flag. So those are like the really three continuation patterns that I as well I like really pay attention to in the market, and you too should as well. So these are like really simple. It's not really no rocket science to them. You see price on an uptrend, price starts creating these, you draw these and you wait for the breakout. But something about reversal patterns that I want to tell you guys about is reversal patterns are really, it's really more about wherever price breaks out that you trade. The thing is, in these scenarios, price is most likely to buy 70% of the time than it is to sell. So you might see this type of pattern someday and price instead breaks downwards and starts selling. Don't be scared to sell, because that's 30% of the time where price will not respect what it's supposed to do. Like I said, it's probabilities. It's all about probabilities. It's like you see this and this, majority of the time it happens, sometimes it doesn't. Maybe that day is the day that it doesn't happen. You feel me, guys? Did that make sense? EP, if you like, you could leave the call and join back, because I don't know, everyone says it's seeing the screen. If you're still on here. Yeah, he left, probably like he's gonna join back later, I don't know. All right, cool. What's a word I used one time? Let me see, just this notice is not opening up on my screen. I need to figure out what's the problem. Yeah, all right, so this is bullish continuation patterns. Yeah, I see why Randy was asking me that. My bad. This is bullish continuations right here. All of this we studied is for the bulls, it's for the uptrend market. And I'll just go ahead and flip my screen. And now we're just studying the reversals. So now it's gonna be the bearish reversal pattern. So this is just gonna be called a bearish pennant instead of a bullish pennant. I'm not going too fast that you guys have not yet drawn and named the things. Bearish pennant. This now will be called a descending triangle instead of an ascending triangle, because price is leaving downtrend and it's continuing, like it's going down, and it does that. Descending. Wait, that was, it's bearish flag. I read this text message, you confused me. Sorry. Bearish flag. So those are like the three reversal pattern, continuation patterns as well that you will see in the market majority of the time. And let me give you guys the patterns that are both ways, which majority of it is like a 50% type of pattern. Like this pattern is like a 70% for you to sell. I will give you a pattern that's 70% to buy and 70% to sell. So have you guys like if that? So the next one that we'll study, price is literally in the channel, which is like a consolidation. That was what Terry was explaining earlier. So price could literally come from a downtrend, right? And it's in here and it moves sideways. And it could break, retest and sell, or just do a breakout. And this is called a horizontal channel. This is a horizontal channel. Price could either do that, or price could literally still play within here and break out back to the upside. So this type of price movement is a 50-50%. You just have to wait for the breakout. That's what you have to wait for. Is the breakout. You could break out up or down, either ways, this type of patterns. And also this pattern as well, This pattern as well, price could like literally be moving within, and you only just have to wait for the breakout. You could do that, break and retest. It breaks up, or it could break down. And this is called a symmetrical triangle. So with a symmetrical triangle, you go either buy or sell just upon the breakout, the break and retest. Wherever level it does the break and retest, you could either buy or sell. Just hurting my hands. So does this patterns make sense to you guys? What's the pattern called? Which of the patterns? You mean this one? This one is a symmetrical triangle. And this one is a parallel channel. Or horizontal channels, whatever like. It's a risky pattern. It's not a risky pattern. You just have to wait literally. You find out that like this horizontal channel is one of the best, because when it like consolidates like this and breaks out, it gives a really nice trade, honestly. It gives a nice trade. But majority of the time it will really break out with the direction of the trend. Like even regardless of it being a 50-50% pattern, you see it like this on a downtrend and like poof, and it just keeps breaking on the downside. So let's go ahead. Let me pull up my stuff to show you guys the patterns. Oh, let me see. And I hate the fact that I can't just share my entire screen. I have to be sharing back and forth, but it's whatever. So in this case, this is a ascending triangle, right? Now you guys see this one is a breakout scenario. Like you see, it's what I've been saying. You see how the candlestick was big and strong. The bullish candlestick was big and strong, and it just like broke out like really good. This is one of the patterns. You see the flag. This is the bearish flag. You see our price was moving upwards up on what we just drew earlier. If you drew it in your book, you will be able to take a look at it. Or if you took a screenshot, you will see that this is like the same thing. This is a breakout. So this is like sometimes this type of breakouts, like whoop, hundreds of peeps right there. Still it's a triangle again. Right there, type of pattern. This is the bearish one. still a breakout, not a break and retest, but a breakout scenario. For the bullish, again, the bullish trend as well. You can see that this was like a break and retest right here. You see how the candlesticks that broke out of the level are kind of small. So that's why I've been saying, like, when you start understanding price action candlesticks properly, you really know the difference between the breakout candles and just the break and retest candles, which are like these. That's a video. Yep. And you could take a screenshot of this right here if you haven't drawn in your book, if you're trying to be the type of person that will, you know, just chilling. Take it easy for yourself. Ascending triangle, bullish wedge, bullish flag, bullish channel, bullish symmetrical triangle. So basically, I just summarize everything for these two as a 50-50%. Then I gave you guys this theory. So the wedge, the bullish wedge is basically the pennant I gave to y'all. It's the same thing, so don't get confused. And this is for the bearish as well. Bearish continuation. So take screenshots, all of that. Bearish reversal, head and shoulders, double top, triple top, all of that. So that is that. We've seen some couple of examples for those. Let's see. So I'm gonna just leave us for that today. I think that's pretty decent for the amount of work that we've done today on the chart patterns and a couple of indicators. The next class that I will come, we'll talk on things like, we'll talk in depth of support and resistance and candlestick patterns. Yeah, those two things. Candlestick patterns and support and resistance. How I personally draw my own support and resistance is different from a lot of other people. So you want to really show up for that call. Yeah, so far for any, where will be the next class? The next class is gonna be again on Friday. So for now, for the free mentorship, is we're doing like 2 calls a week. Then for the first couple of months, then probably I'm gonna die down to 1 call a week when I start doing my vacations and stuff. So because right now I'm not really taking no vacation. I'm like not like vacations that I really take too long out. So I'm trying to make use as much time as possible and get you all started. So Friday at it's 11 p.m. right? Cameroon time. That's when I have my Friday calls. So I appreciate you all if you guys could like maybe on the calls like these, you guys like take a whole little video, post it on Instagram and tag me. So like let people know that we're on this, like we're on the right path. No problem, man. We're gonna get this, we're gonna get it for sure, for sure. So I appreciate you all for staying to the end of the class today. I'm gonna see you again next week. Y'all have a blessed trading week for the people that be trading like that. For the people that don't yet be trading like that, go ahead, try to apply what I've taught you so far. Remember last class I told you guys to get an account with TradingView so you can like go now and start trying to identify these chart patterns that we have currently talked about, and see how, try to be able to identify them on every different type of time frames and just draw them out, take screenshots of them, and that'll be pretty good. Then from there, I will tell you guys when to actually start trying to practice how to trade, to like execute trades. As of now, you guys don't really have enough data that is good enough for you to analyze the chart yet properly and to take trades, because right now you don't really have a strategy. We haven't even gotten yet to the strategy. I'm just giving you guys the basic foundations of trading and like certain things to look at. So yeah, again, thank you all for staying to the end of this call. And God bless y'all. God bless the hustle. One day we all gonna be profitable traders. Did I apply only to TradingView? I have been trading with only trade and Cortex, or maybe do I? Anything that you can literally see a chart on, anything that you can see a chart, it applies. We like using TradingView because it's more convenient. It's like more convenient for everybody. But if you've been using a different software, that's fine. I've always been using TradingView. I've always been using TradingView. Some people could use MetaTrader 4, like, but when I'm actually trading, I use MetaTrader 4, my MetaTrader 4, MetaTrader 5 on my computer to like execute my trades. But I do my chart ops on TradingView, like I mark on my charts and everything. Excuse me. Yeah, and you could let me stop recording. I think that's